The head of OPEC, the Organization of Petroleum Exporting Countries, says that fears of slowing oil consumption in China, which have been weighing on commodities generally this week, have been blown out of proportion. The Secretary General told Bloomberg Television that the world is, in fact, quote, running on thin ice when it comes to spare capacity for oil. Let's bring in Andrew Lipow. He's been watching OPEC for a few years now. He's president of Lipow Oil Associates. Andrew, what do you think OPEC wants? I mean, are they happy, for example, with the current oil price?
I think OPEC is quite satisfied with these higher oil prices because it suits them to meet their domestic budgets, which were starved for revenue during 2020 during the height of the pandemic.
So they don't necessarily want to push WTI up to 120, for example, as it got to in early March.
Well, I think their greatest fear is that as oil prices go higher and higher, it could tip the world into a recession that impacts demand precipitously. And we've seen in the past when we have a lot of demand destruction, oil prices back in 2008, 2009 dropped to $35 a barrel. And then in 2014 to 15, it dropped to $45 a barrel. So they're trying to strike a balance to keep these prices elevated, but not necessarily too high.
The OPEC keeps going on about a tight world oil market. Meanwhile, it raises productions really in dribs and drabs, pretty small amount, the production increases, and in reality isn't even producing those quotas.
Well, I think the OPEC Secretary General's comments are a bit disingenuous, as if OPEC is not part of the overall oil industry. If we look at, investment in OPEC countries in particular, Saudi Arabia and Kuwait have been negotiating about production out of their shared neutral zone area for many, many years. If we look at countries like Nigeria and Angola, which are starved for investment basically because of either their local government policies or unrest on the ground or a variety of other factors. And then we can look at Libya, which is really stricken by political unrest that results in either port closures or strikes that shut in oil fields. So OPEC is part of the overall investments around the world, and certainly these higher oil prices have encouraged additional drilling in the United States as well as in Canada.
Where do you think American oil production is going, Andrew? We have heard a prediction from Washington, as you know, that next year oil production could be a record in the United States, not far off 13 million barrels a day. But has the ramp up in U.S. output been slow so far?
Well, I think it's slowing down because the oil producers are facing higher costs, lack of crude, lack of crews, lack of equipment. And I think what we're going to see is the EIA is going to revise downward their 2023 production forecast, which they've already been doing over the last couple of months. It's now projected to be 12.77 million barrels a day, which would still indeed be a new record for the United States.
What about President Biden? He must be happy to see your gasoline price in the United States dropping well below $4 a gallon now.
Well, I think the Democrats are quite happy about it, but the one tangible action that the administration did take was the release of the strategic petroleum reserves of about 1 million barrels a day. But that's going to end in the middle of October, so the market is now facing the quandary of how are we going to replace those SPR supplies.
So, Andrew, let me ask you, we're looking at some of the items that could stop or halt the weakness in oil prices. Andrew, where do you think oil is going to end the year? An impossible question to answer, but will it get back up above $100 US, for example, WTI?
Well, I think it's quite possible, and it really is going to depend on how these European Union phased-in sanctions or a ban on the purchase of Russian oil is going to play out, or whether Russia is going to be quite successful in finding new customers for their oil, and that mitigates the overall impact of sanctions.
Isn't it amazing, Andrew, before we let you go, that oil has essentially gone back to where it was prior to Mr. Putin attacking Ukraine?
Well, it just does show you that Russia has been quite successful finding new customers at the same time that these higher oil prices, along with higher food and consumer goods prices, is impacting the consumer really around the world. And it's not isolated to the United States. When we do look at countries in Southeast Asia like Pakistan, Bangladesh, Sri Lanka, they simply run out of money to buy energy.